All right, everybody, it is Tuesday, April 7th. I am here with you from the epicenter of the coronavirus pandemic here in New York City, where yesterday the city recorded a record number of deaths. However, a little bit of good news, I have to say, that the number of intensive care admissions has been dropping down. So that is positive. And again, this is day 11. I am wearing this. It symbolizes this ordeal we are going through. And I'm doing this for posterity. We're going to end up at some point looking back at this. And maybe we don't want to remember this. Maybe it's a bad idea. But I'm doing it anyway. All right? Here we go. We had a little bit of a reversal in the stock market today. We actually opened very strong, up 700, 800, 900 points, but we closed lower. That's going to happen. I mean, look, I just went over the numbers today. Again, really the only thing that we are seeing right now from a fiscal expansion, fiscal support point of view, that is unemployment benefits. They really are beginning to accelerate. Yesterday they were up 850 million in one day. They are now 2.5 billion over where they were last year. Total amount 18.4 billion, but that's up 2.5 billion. So it went from being down year over year in February. Okay, it was down like 300 million. Total unemployment benefits paid out was 300 million less than last year. Now it is 2.5 billion above last year. So that's, you know, that's some fiscal support, but it's tiny, it's minuscule. Taxes are still way too high. If you look at taxes minus total spending, I mean, that should be collapsing. In other words, spending should be far exceeding taxation, right? Because when that happens, that's a net addition to income, to the economy. That's not happening. Not happening. I mean, it's static. Since all of this economy has been shut down, it's static, that number. That should be plummeting. In other words, the spending should be up, the taxation, and now it's going to happen, but it's going to happen the ugly way. In other words, nobody's going to be able to pay their taxes because nobody has any income. You don't want it to happen like that, the bad way. You want it to happen proactively, and that means the government, they should be cutting taxes like crazy right now, eliminating things like payroll for people who are still working, these poor people on the front lines. You know, healthcare workers, grocery stores, delivery people. I mean, I can't believe what's going on. Not to mention the rollout of these loans for the SBA loan. I think I talked about this yesterday. I mean, that thing is all jammed up. It's not working. Now they're talking about, having to ask the Treasury for another 250 billion. I mean, supposedly the Fed was bank stopped. That's another thing. The Fed was, remember the rule changes they did last week, which I talked about, where they were, jiggering with the leverage ratio, where now you didn't have to, the banks were able to exclude reserves and treasuries in the calculation of that leverage ratio. You know, that's something, the leverage ratio I've been talking about for over a year. How these massive reserve additions have been a constraint on loan creation, because these are, trillions in non-risk reserves, added non-risk assets. That factors into the denominator of that equation. I'm not going to go into the whole thing, but anyway, remember last week I said, hey, this is a good move, right? The Fed is suspending that for a year, and now what happens? The Office of the Controller of the Currency and the FDIC says, no, you can't do that. So like, who's the regulator here? Who's in charge here? Like, this thing is a mess, man. It is a mess. And then remember last week when I said, why is the Treasury putting up $450 billion in capital to the Fed? The Fed doesn't need it. I mean, it's right there in Article 13, Section 3 of the Federal Reserve Act. The Fed could lend against to anybody without a capital infusion. Bernanke came out in an interview today, said exactly the same thing. So the whole thing, I mean, it said exactly the same thing as I said. Fed doesn't need that. That was, what, 450 billion of that 2 trillion stimulus? That's like almost 25% of that whole, stimulus, which was all a bunch of loans anyway, which nobody can get. So, and 25% of that was like a chunk of money that was, I think I said in the video that you could give everybody $1,500 in the entire country, 300 million people, on top of the $1,200 checks that we're all supposed, not all, but that some of us are going to receive. But no, they give it to the Fed, who doesn't even need it. So this thing is a total freaking mess. Now look, so what's happening here? Why is the market has been rallying over the past few days? I think it's really sentiment in two aspects. Number one, there seems to be a little bit of positive news emerging on the virus. I just spoke a few minutes ago on the fact that ICU admissions are going down here in New York. There's looks to be death rates in Italy and Spain also plateauing, maybe coming down. There's some optimism there, maybe about the hydroxychloroquine as a treatment, that medication. So, and again, I think when everybody comes to the whole entire world, the entire global scientific community is now focused on this problem, and when that, I mean, we've never seen anything like this before. I mean, really, the entire freaking world scientific community is focused on, so there'll be a breakthrough. That's number one. All right, cause for optimism. Number two is everybody's expecting the fiscal boost, right? The market is banking on this fiscal boost. Now this could end up to be a big disappointment, because the numbers right now, I mean, I go over these numbers every single day. I have these numbers. You don't see it. I see it. It's in the daily treasury statement. You have to know what to look at. And by the way, if you buy my course for 99 bucks, it's the best 99 bucks you're ever going to spend, understanding the daily treasury statement. It's on my website, pitbulleconomics.com. Finally, let me talk about gold. Right now, we shot up last night to, I think, almost 1730. We pulled back. We closed negative today. I bought a little bit today. Remember, I got out a week, 10 days ago when the Russians said they stopped buying. I bought a little bit today at 1677. I got to be honest, I'm not so comfortable with that purchase, and here's why. If you look at the gold term structure right now, in other words, in the futures market, if you look at the June, which is the actively traded month right now, the June-August spread, that is in backwardation. It's very rare to see gold in backwardation because it usually reflects a positive curve, a positive interest rate. And it's been like that for years and years. Okay, you go all the way back to 2018 or before that. Gold was in contango, meaning like the front month was trading below the deferred contracts. But that flipped around last week or 2 weeks ago. And we have now where the June is trading. Now that's bearish. That is bearish. That is a signal to the market. Now, why does that happen? It could happen for a number of reasons. In most commodities, physical commodities, it happens because there is a shortage. And so users of the commodity are willing to pay a premium because they need this stuff now. And it drives the front month, the spot, over the deferred contracts. But at the same time, it's the way that the market kind of entices or coaxes out supply, because you can sell now the spot and buy a deferred contract and lock in that spread as basically a risk-free profit. This is bearish, so I'm a little bit uncomfortable. We haven't seen this in years in gold. It is a very, very rare occurrence, and it is a signal that the market is sending that it's looking for supply. And remember, when you talk about gold, as much as I've been bullish and I've been talking about supply and demand, you got to understand that every ounce of gold that has ever been mined since the beginning of time still exists, okay? It's not like oil when you burn it and it's gone. Every ounce of gold that was ever taken out of the ground still exists somewhere. It's either on somebody's wrist or around their neck or in a bank vault somewhere. So supply could come out, believe me. So very touchy on the gold situation right now. I don't like the fact that the market is in backwardation. That's a bad sign. I bought a little bit today, not a lot, 1677. We'll see what happens. All right, everybody, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. If you like my stuff, please subscribe. And the links to the sign up down here below in the description. See everybody tomorrow. Bye.